Welcome to the B.F. Anderson Techno Fundamental Report for October 31st. Sir Isaac Newton, number one rule: an object that is at rest will tend to stay at rest. An object that is in motion will tend to stay in motion. This is the whole concept behind trend following, which is what we practice. We're currently in a power trend, and we'll talk a little bit more about that, but power trends help to get you in and to keep you in when the stock market is in an unusually strong uptrend. That's the whole idea behind power trends. So when you're in a power trend, you need to think differently. You need to be aggressive, get rid of the fear. If we're in a downtrend, well, that's another story, and that's where fear comes into play. Paul Tudor says all roads lead to inflation. Paul Tudor is a large money manager. He quotes here, he says, the U.S. is at an incredible moment in history. With the national debt ballooning to nearly 100% of GDP, now from 40% only 25 years ago. Whoever will be elected next month will have to deal with the issue, he added. But campaign promises of additional spending and tax cuts made by Harris and Trump would only exacerbate the problem. Tudor basically is saying that we are borrowing money to pay the interest on the debt. The interest on the debt is higher, the cost is higher than everything the government spends money on, including military. And the only thing we spend more money on is Social Security. So the reality here is that if we're going to have inflation in the long run, which he is saying, you really want to avoid the bond market, and you want to avoid, fixed income type concepts, because the inflation, if you really think about it, if you've got inflation of, say, 2-3%, and then you have to pay taxes on the earn, and they're also talking about tax increases. They're going to have to. It's just no getting around it. So we're going to have to be patient. The patience of Job. He had a lot of adversity with God and got through it and survived it. Don't try to get rich quick. You're not going to win the lottery. You can be Mr. Moneybags in the long run. So it's all about getting rich slowly, not quickly. So let's get into the power trend. As you can see here, the NASDAQ hitting new highs. Now the power trend will end if the 21-day crosses below the 50-day, which we're not close to doing that. So on the major indexes, we are in power trend. Now, S&P 500, same story, did not hit a new high the other day, but continues to stay above the 21-day. Again, the power trend will end if this line crosses below this line, which is considered a death cross. Now, on the value line geometric index, this is very important. You have to realize that when this index is going up, we call that risk on. People are willing to take risks. This index has smaller companies, a lot of growth companies. Now, if you're going to make money enough to offset inflation, you've got to consider growth stocks. Now, you can see here for this extended period of time, the last 2 years. So these stocks are completely out of favor, but they're coming into favor. This is where the opportunity is in the small cap, mid cap growth stocks. Mortgage rates, as you can see, have been kind of popping back up again. That's what's causing the volatility in the market right now. We're getting some increases in interest rates. You can see here on the power index. Now, I hate to say it, but this is not a power trend. This is just what we call the power index. As long as we stay below the zero line, it continues to say interest rates are in a downtrend. However, we're getting a somewhat of a reversal of trend here. So we'll have to watch this closely, but interest rates are inflation, interest rates, so forth, are important. Primary trend of the S&P 500 continues to be up. The primary trend for the NASDAQ continues to be up. So when you're in a power trend and the primary trend is up, use these corrections or these pullbacks as buying opportunities. Oil is really starting to drop here. We're getting down below $68 a barrel. You can see on the trend meter, we're turning back down into the red. So oil stocks are going to have a tough time in here if oil prices continue to stay this way. Aggression index, much improved. We had that August drop, which really set us back a little bit. We got a real cautious in there. However, it's looking very positive. In fact, we're about to get a golden cross here of the 10-week above the 40-week. So the moving averages are turning back up, and it's saying the aggression index is saying be aggressive. Now, we did get a little bit of an increase in the number of new lows on the New York Stock Exchange. However, it's just a one-day event. We'll continue to watch that indicator. This is basically designed to tell us when the sellers are done, and they really are done for now. The Renaissance Fund, this is a IPO fund. This is all the IPOs of the last 2 years, and it's a ETF. And you can see that this is risk on. So these stocks are looking good. They're above the 10-day moving average. You had a nice base here and now breaking out. So we're in earnings season, by the way, and this is kind of important. Now, in the long run, we got to remember that demographics are very important, and we're starting to see where the millennials are, turning 35 years of age. In the past, when we had the baby boomers, we had a massive bull market because we have to realize 90% of the economy is consumption. I don't know if it's exactly 90%, but it's a big number. And so when you've got young people in your population, they consume. I'm 70 years old now, and I don't really consume very much. I've completely different patterns. So just remember, we are in a very positive demographic mode here, which should continue to drive the bull market. So if you have any questions, please let me know. Thank you very much.